upcoming US GDP and what's gonna happen to crypto and stocks. If your crypto investment sees some extra volatility this week, you can thank the Federal Reserve. That's because the Federal Reserve just announced another big rate increase as a part of its ongoing efforts to fight inflation that won't go away. On Wednesday, the Federal Reserve raised interest rates by 0.75%, marking the fourth consecutive increase since the start of the year. If the last few federal meetings are any indication, crypto investors may be for another wild ride this week. Hey guys, welcome to the channel. You guys are watching Crypto Hub. So first of all, let's talk about how the federal meeting can affect the crypto market. Aggressive rate hikes are not good for crypto prices, and experts believe the volatility will continue in the short term. Since the beginning of 2022, risky assets such as stocks and cryptocurrency have been highly correlated. Both have been moving in the lockstep this year, with investors fleeing in response to rising interest rates, surging inflation, and the possibility of a recession. If the stock market falls as a result of the rate hike this week, the crypto market is likely to follow suit, and vice versa. The Federal Reserve interest rates hike in June was one of the many factors that jolted the crypto market, which was already in crypto winter mode, with prices slashed across the board. Since the peak of the last year's bull run, Bitcoin and Ethereum have dropped more than 70% in June. According to Edward Moya, senior market analyst at Oanta, investors are keeping a close eye on Bitcoin, Ethereum, and the crypto market as a whole to see if the June lows can be retested. It is difficult to know whether the market has already priced in this week's potential rate increase. See Joshua Fernando, CEO of eCarbon. 75 basic points appear to be the consensus, he added. So if we see something significantly higher and it kills the equity market, I would expect the crypto market to follow suit. Expect more market pain if the Federal signals aggressive rate hikes through 2023. Now let's see how the rising rates and inflation continue to derail stocks in 2022. Since the beginning of 2022, stocks, cryptocurrency, and commodities have experienced significant volatility as investors have factored in rising interest rates and higher energy prices. But with multiple rate hikes already completed and more seemingly on the way, what's in store for the rest of the year? Less money floating around in financial market is a net negative for investments overall, but investors have a notable habit of looking beyond today's news. Rising interest rates will always trigger a period of stock market volatility, said Dan Raju, CEO for Radier, a brokerage platform. The fact that the Federal has indicated multiple increases indicates that we will have another year of volatility. However, market participants are divided on whether the Federal will do too much or too little, and whether this has already been priced into stocks. Volatility in the market is driven by this uncertainty. Elevated volatility tells us that there is a fair degree of permission already baked into the markets, said Craig Fair, principal and investment strategist at Edward Jones. He believes the Federal may not need to raise rates as aggressively as some expect, allowing markets to rise. According to the McBride, the market is somewhat optimistic about the Federal's ability to control inflation, which could create additional risk if it does not. In the latter case, markets may have to readjust to more aggressive rate hikes until the Federal gets a grip on inflation and reins in it, implying that the rest of 2022 will likely be rocky. That means volatility will be the order of the day for the foreseeable future. Now let me shed some light on how the higher interest rates can affect crypto. Other major asset classes have reacted differently to rising interest rates, while cryptocurrency prices have fallen along those of the other risky assets. Cryptocurrency has frequently been promoted as a panacea for all ills, including inflation, low interest rates, a lack of purchasing power, and dollar depreciation, among others. Those positives were easy to accept as long as cryptocurrency was rising, seemingly regardless of other assets. Crypto assets were once thought to be an inflation hedge, but they have recently behaved more like other risky assets such as stocks. Higher interest rates will be a headwind for crypto assets in the future. Indeed, cryptocurrencies, like other risky assets, fell when the Federal announced in November that it would be begin tapering its bond purchases and signaled that higher interest rates were on the way. While Raju acknowledges that crypto assets are certainly feeling the effects of higher interest rates, he predicts a positive year. I'm confident that crypto will be a net positive in 2022 because any short-term declines caused by the rate hikes will be offset by increased institutional and retail active trader adoption of this asset class, says the author. There's one last thing to the topic. How should rising rates impact your investing strategy? Rising interest rates, soaring inflation, and international conflict all contribute to a steep volatility for the crypto and stock investors. However, these risk factors may be overshadowing strong economic fundamentals in the United States. Consumers, for example, are eager to get out, travel, and spend some of the money they have been holding for the past 2 years, which bodes well for the travel stocks. Backed cites a strong economy, rising corporate earnings, and low unemployment as key strengths. Those fundamentals are positive for stocks in the long run, but the ride will be bumpier in the short term as the interest rate rises. With such strong fundamentals, most investors should stick to a long-term game plan when approaching this type of market. For many, the long-term strategy entails continuing to invest regularly in a diversified portfolio of stocks or bonds while ignoring global noise. Others' game plans may include purchasing and holding well-diversified index funds. In any case, don't let emotions get in the way of a sound long-term investment strategy. While short-term traders may be concerned about rising interest rates, it is critical to keep things in perspective. When fundamentals are strong, rates tend to rise and stocks tend to do well as well. Experts predict that markets will recover and perform relatively well during periods of rising interest rates. Many studies show that average stock returns during rising rate periods are similar to long-run average returns. Instead of trying to find the best time to sell, buy and hold, investors can take advantage of the market's volatility and then try to find the best time to add more. That's all for now, guys. I hope you enjoyed the video, and if you did, don't forget to like it and subscribe to the channel for more amazing updates and videos. We will see you in the next video. Thank you.